Let me now bring on board Ratnesh Kumar, Managing Director with Standard Chartered Capital Markets. Ratnesh, good morning. Thank you for joining us. Ratnesh, what would you attribute the post-budget selling to? Budget disappointment, global environment, or routine profit booking?
Well, I think the budget day also coincided with the expiry date, right? And the fact of the matter is that there was much of the volatility was probably driven by that, and also I think there were probably a segment of investors who were looking at a whole lot of massive announcements in the budget, which is in any case in the last few years hasn't been the case, because especially since the budgets have proven to be more and more difficult to get through the parliament. I think what you've seen is much better dispersed announcements through the year rather than all concentrated in the budget. But probably there was some amount of expectation. And lastly, there was some amount of concern related to the TRC Mauritius issue, which subsequently got clarified. But I think on the day it did cause some amount of negative impact.
Ratnesh, with the kind of clarifications that we saw from the finance minister, do you think now investor sentiment globally as well as locally is smoothened out? Because looking at the way the market is behaving right now, it doesn't seem to be the case.
Well, I don't know about today, but I think the clarification itself was very timely, and it has addressed some of the concerns which were there. If you quite recall, last year, when the GAR concerns had happened, it took fair number of days before actually the clarification could come out. So it's really been helpful that the clarification has come the very next day, and it is definitely going to soothe some of those concerns which are there. I think the market is also reacting on the negative way to, I think, some of the pent-up expectations, basis which some positive positions might have been there in the market. And of course, you've had for the last 2-3 weeks, some amount of negative trends in some of the mid-cap stocks, which is having a follow-through impact.
In general, are global investors now worried about growth? Because India's had high fiscal deficit number for 4 years now, and despite a high fiscal deficit number, foreign institutional investors, they've still invested in equities, but it is for the first time in last 10 years, we are staring at a GDP number which is below 5%.
Yeah, so growth is actually, if you look around, growth is concerned globally. But let's say in the Indian context, the fact that it has come sub 5% for 2 quarters, it is obviously a heightened sense of concern. And if you look at the Indian market's performance in the last 6 months, much of that has been actually driven by policy initiatives rather than any kind of meaningful change in earnings momentum. So if you look out FY14, earnings growth expectations are still around 12-13%. Probably the surcharge which has come in the budget will shave off 1.5% from that growth. So you are looking at early teens type of an earnings growth, which in the context of India historically long-term average has been 15% or thereabouts. So it's not just the GDP growth, but also earnings growth, which has been subdued, and global investors are looking at when that is going to turn around. So in fact, after policy being the big driver for the market last 6 months, the turnaround in the earnings cycle is probably going to be a far more significant driver for the market going forward. And unfortunately, that is something which will have to be waited out, because as you saw from the budget itself, there was a huge cut in plan expenditure last year, which is already showing up in terms of demand slowdown in many of the sectors. So the hope going forward is that there is 35-36% increase in plan expenditure, which is being budgeted at least for next year. If some of that begins to come through, and you begin to have further rate cuts coming in from RBI, that the growth expectations start to take more and more root. But at this point, that is not the case, and that is indeed the biggest concern.
Ratnesh, what would you say about the mid-cap meltdown that we've been witnessing? And this doesn't seem to be any budget-related thing, because this has been going on before the event as well. Are these funding issues, or is there a sense of basket selling here?
No, I think basket selling are typically in the large caps or index stocks. So I think what you're seeing in the mid caps is certainly not related to the budget. It is more probably related to funding issues in some cases, or individual mid cap related issues, of which I don't have any sort of, specific extra sort of intelligent answer to, but that's something which is more likely the case than anything fundamental or from the budget.
Ratnesh, since you serve some of the biggest global investors, what are the kind of sound bites you are picking from them? Are you getting a sense that globally investors are now nervous about Indian markets, or are you getting a sense that at the current juncture, in fact, we should expect more inflows because markets have corrected and selectively valuations are looking attractive?
Yeah, I think the first big concern for global investors all over the world is clearly growth. And what you've seen that the year started out very well in terms of flows coming into equity funds globally, I'm talking about. And but unfortunately, in the last 2, 3, 4 weeks, that has again slowed down quite a bit. So the initial momentum which was there of heavy inflows into equities, which was equity funds, which was also resulting into flows into the Indian market, that has definitely moderated. In the Indian context, what you had was that FIs were the only buyers in the market because you had the domestic institutional flows were negative in the market, and plus you've also had a lot of equity raisings, be it from the OFS, divestments, etc., or even from the private sector. So I think all in all, the supply-demand balance in India for the market is heavily dependent on positive flows from the FI side, and what we've seen in the last couple of weeks is there has been a slowdown, and that's largely driven by the fact that globally you've seen slowdown in funds coming into equity market in general.
Ratnesh, really appreciate your time and thank you for your insights.